Hello, ladies and gentlemen, Greg Michalowski from Forexlive.com. Today's date is November 9, 2022. This is the Morning Forex Report. Stay tuned. The day after the U.S. elections, and as expected, we still don't know for sure how the results are going to play out, but the expectations are that the House switched over from the Democrats to the GOP, the Republicans. The Senate is still up in the air with the Democrats leading by one with 5 undecided states or 2 close to call. So we will see how all that plays out. It could take a while, however, for the votes, and could be some runoffs and stuff like that come into play. So it's going to be a while. So we'll see how it all goes. But it does look like the red wave was not as strong as what was expected, and that may put some limits on both sides of the aisle. You can't necessarily say that it's a win for the Democrats. You can't necessarily say that it's a win for the Republicans, which may lead them to a mindset shift more toward the middle. I don't know. That's my hope anyway. But we'll see how all things play out. Nevertheless, we are seeing yields move higher in early trading, and that is forcing the US dollar to the upside. So let's take a look at some of the major currency pairs from a technical perspective. We'll start with the euro versus US dollar. And what we've seen over the last 1, 2, 3 trading days is sharp moves to the upside. Trading yesterday moved right up to the high price that we saw here on October 27th, and sellers came in against that old high, and the market started to waffle up and down into the Asian session, into the European session, and it started to rotate back to the downside, where the price retested the 100-day moving average. That's the overlay on this hourly chart. Yesterday, the price moved above that level, and we saw increased buying to the upside that took the price again to the highs. So we've recently fell back below that 100-day moving average. That's a disappointment for the buyers looking for the break and the rotation to the upside. If I take a look at the 4-hour chart, the reason why the price is having difficulty up here is not only that we had the high price here, which by the way tested the 100-day moving average because it was lower here today. Yesterday we broke above that level. But if you go back in time and you take a look at all these different swing levels through here, swing low, swing low, swing low, swing low, swing low, swing low, reverse to swing high, another swing low here and break below. Hadn't returned back to that level until a few weeks ago, where the price rebounded toward that swing area. And again, yesterday we came up to it, so we had this big V formation, or this I like to call them laps, where the market retraces the entire lap, sharp move to the downside, sharp move to the upside. And we found resistance sellers against that level near the 100,957 level and near the swing area right here. So with the bias, with the price now below the 100-day moving average, guess what? The bias shifts in that direction. A little bit of disappointment into the direction to the downside. That is, when we'll start to look toward this level on the downside if the momentum continues, which is around the parity level. So that's a nice, easy round number to remember. And then we'll look at this area down here on further selling to the 99.65 to 75 level, as long as the price can remain below the 100-day moving average. It's not necessarily guaranteed here, but that is the bias shift here in the early trading from a technical perspective. So we have to respect that shift. Stay below the 100-day moving average certainly keeps the sellers more in control. If we start to move above it, look for momentum in that upward direction, and sellers who made the play to the downside on the break lower would probably force to cover, but the bias again is still more to the downside here for the euro versus US dollar. Let's take a look at the dollar versus yen, and I spread it out a little bit here because the low price that we saw in trading here today moved into this swing area. The swing area defined going back to these days right here. I'll put it on the arrow instead of drawing it like that. Low or a high here, high here, high here. Then started to trade more above it through here. Just a minor little swing area over 7 or so trading days here, where the market traded below the level and then started to move back above it and move to the upside. Again, we found support here and here on these sharp moves to the downside, and trading yesterday and today. seeing a bunch of different lows in that area. So this area is starting to develop a fairly robust floor here, and as you can see, we've seen it bounce off of that level in the last few minutes of trading as the dollar yields started to move a little bit more to the upside. We're seeing the dollar yen react immediately to those yield moves. Part of the decline here is as a result of yields moving down in the U.S. So not necessarily all that surprised. The correlation between that, the 100 and 200 hour moving average, and this swing area through here. You can see the number of different swing lows and swing highs in between there. Are the next targets on the top side 146. What is that? 83 to 146.98. So let's call it 147. That's a swing area, and the 200 bar moving average comes in at 147.31. We could say sellers lean against this if the price were to move up here to lean against that 100 and rotate back to the downside. So people who are more bearish the dollar versus yen, and by the way, some of the bullishness, the trend like bullishness seems to be coming out of the market for this currency pair as. Although the Fed's going to tighten, we're getting near the end of the road type of traders start to think about that prospect and perhaps weakening the dollar versus yen. So this is what it looks like on the daily chart. And you can see the importance of this area right through here from the daily chart. Move below that level and we start to look toward the 38.2% retracement, 143.703. So I guess what I'm saying is that there could be two-way action here in the pairs that decides which way the next shove is going to be in this currency pair. Just be aware, be prepared. Let's take a look at the sterling versus US dollar. And in trading yesterday, the price moved higher again for like the other currencies 1, 2, 3 days in a row. Although we did have a move to the downside in the Asian/European early European session before the market moved higher. In this currency pair, ahead of the extreme here, we did have some swing levels through here. It was a little bit choppy with moves above it here and here, but then reestablished this ceiling through here before rotating all the way to the downside. So if we're doing that V formation, we didn't quite make it all the way up to the high, but we made it into this swing area here before rotating back to the downside here in trading here today with the help of the rise, most recent rise in the yields, which has just taken the pair back in between the 100 and the 100 and 200 hour moving averages. Those are these two moving averages right here. 200 is the green, 100 is the blue, and the price trend right in between those two levels. What we have to do is use those levels as barometers for bullish or bearish going forward. So if the price starts to, with a break more to the downside here, if the price starts to move back above the 200, it'd be more bullish. If the price moves back below the 100-hour moving average, it would lead to more bearish bias. It's just as simple as that for the sterling pound versus U.S. dollar. Let's take a look at the Aussie versus U.S. dollar next. And if I take a look at that, I'm going to put it on the hourly chart here. Why? Because we're moving back closer to the 100-hour moving average, 200-hour moving average. Of note here for this currency pair is that we did move above it and then started to base against the higher of the moving averages here. That would happen to be the green line before moving to the upside here. The break to the upside did take, I'm going to put it back on the 4-hour chart here for a second. The move to the upside did take the price to this swing area here in the 38.2% retracement of the move down from this high to this low right here. 38.2 came in at the 0.65384, and in trading yesterday, the market moved up to and through that 38.2, and also above this these swing highs here. So we should have seen buyers come in, push the price higher through here. We didn't. Instead we saw sellers lean against that area and push the price to the downside instead. And so that sort of gave a clue that maybe the market wasn't all that ready to move to the upside, and we started to see some liquidation or some just movements in the other direction for this currency pair. So if you can't get above the 38.2% retracement of a trend move to the downside, the buyers are not winning. So keep that in mind here for this currency pair. It was a nice up move to the upside over the last few days to the upside, but there is some disappointment in not being able to get above that 38.2% and stay above that level. So there you have it. A look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.